Hey everyone, Luke here. Today we're gonna do an update on some of my holdings because I did end up selling something and I started a position in two new interesting companies. So the stock I sold was Jack Nathan Healthcare. I have a little bit left, but I sold most of my shares. This stock just didn't sit right with me, and sometimes that happens. You'll buy a stock and you'll think at first this thing has potential, but then it kind of just goes sideways. Not that that's a reason to sell, but over time it just didn't feel quite right. I wasn't sure how much operating leverage is in the business model, how long it'll take them to scale. So I just had some unanswered questions about the company that I wasn't sure about, that made it difficult to forecast or guess at what growth rate they might have going forward. But really, there were also these two other companies that I felt I would rather have my money in. And that's the biggest reason I sold, is that I think there's better places for my money right now. So what was the other stock I bought? The first one is LEAT. Now this company makes mountain biking and dirt biking apparel and gear, basically. It's an interesting company. They're really tiny, so I don't know that I'm going to cover it that much, but let me pull up their website here. If we pull this up, mountain biking and motocross, so you can see they do gear and everything. Now this company's interesting because they have this neck brace, and this for a long time was their most popular product and what drove most of the business. But recently the neck brace has been declining in popularity and in sales, but LEAT has managed to increase all these other things in sales quite significantly. So you have the growth rate, the revenue growth of these other products being masked by the decline in neck brace revenue, which I think is a really interesting dynamic. Once that neck brace revenue gets low enough, it won't even be noticeable, and then these other products will continue, or hopefully would continue, to grow revenue at about the same rate, maybe 20 to 30% a year. And the company should see pretty substantial revenue growth and profit growth because of that. So I think it's an interesting company. Now, they only trade OTC in the US. Symbol is LEAT. So that's an issue if you want to buy it in like a tax-free account in Canada. You would have to buy it in a margin account, or I think a cash account. I bought it in a margin account, so ultimately I will pay taxes on any gains in the stock. Also, this is a really tiny company. They only have a market cap of about 30 million. They're trading at only about 1 times sales. So that's a really cheap multiple on a very small company though. I'd be very careful if you buy this. Don't get too big. It's extremely illiquid, and I actually would suggest that most people don't buy this one. It's risky and you definitely need to do your research on it. That said, I do think they have a possibility of being quite successful going forward. Now the other stock I'm looking into is Green Lane Renewables, symbol GRN on the TSX Venture Exchange. Again, another really small company. They're trading at about 75 cents. I was buying it in the mid-60s, and I plan on buying more. These guys are a direct competitor to one of my largest holdings, Zeebeck Adsorption. And these guys do have a nice backlog of orders, which makes them interesting. Again, direct competitor of Zeebeck. They basically do a lot of the same stuff, but they're way smaller. They're only about a tenth of the size, I believe. And if we look at, so they have a market cap of 68 million, and Zeebeck in Canadian dollars has a market cap of 600 million. So they're just a little more than 1/10 the size of Zeebeck, which reminds me of Zeebeck from a couple years ago. If we go back to XBC was a 70-cent stock. Where is that? Back here. In late 2018, early 2019. And so it's been almost a 10 bagger since then. If you go back to like early 2018, it's more than a 10 bagger at this point. So I think Green Lane has a similar opportunity. Their management seems competent, and so we'll see if they can execute, which it's really just going to come down to execution for them. And maybe, who knows, maybe they'll be the next 10 bagger in this industry. That's all I had for today, so make sure you subscribe and leave a like if you enjoyed this update video. This will be going up on my Substack, so check that out, link in the description. And I'll see you in the next one. I will have really high quality videos coming out. I just bought a pretty nice camera, so stay tuned for that. I'd expect my first good video like that to come out pretty soon. Probably going to talk about XPEL's Q3 2020 earnings report that they released about a week ago. And I'll see you in the next video.